As of July 1st, student loan changes are going to occur. If you haven't heard already, now is the time to really pay attention because anyone with current student loans or going to apply for student loans in the future, whether you are the student yourself or the parent of a student, there are going to be major changes that are happening, which were signed into law last year under the One Big Beautiful Bill. As of now, borrowers who don't borrow more in the future, that's a key term here, do not borrow more, meaning that they never borrow again beyond what they already have in debt today in terms of student loans. They can actually stay on the existing plans of ICR, IBR, and the pay plans. Keep in mind, though, that this is up until July 1st of this year. So if you do want to continue in one of the existing plans, you have to make this decision by July 1st. And that's really what's throwing a lot of people for a loop right now, because a lot of borrowers who have been on forbearance really over the last couple of years anticipated that they may have had maybe another year or two to sort of bide their time on making a decision. And that time window has dramatically shrunk. So again, up until July 1st is when you have the ability to either stay on your current plans or if you want to opt into the new plan, the repayment assistance plan. Let's talk about the new plans that are being rolled out. So the standard repayment plan, which is what most people will probably become familiar with over the next few months, is the new plan that's going to be rolled out based off of the total loan balance. And I'm going to put a chart up on the screen for everyone to see how this plan is going to change. And again, the total loan balance is going to determine the length of time that you have to repay this loan by. So extending the length of time that you have to pay back the loan should in theory reduce the monthly payments that each borrower has, thus making it more manageable for borrowers who have larger loan balances compared to borrowers who have smaller loan balances. Under the new repayment assistance plan, the changes that are being made are actually pretty unique. So instead of it being calculated on your adjusted gross income minus the federal poverty level being stripped out to reduce the overall income that was actually calculated, they're removing that federal poverty exclusion and now they're just basing it on your adjusted gross income. So for every $10,000 of AGI that you have, an additional 1% will be needed to pay back your loan. So AGI of 10,000 or less is just going to be $10 per month. Beyond that, it's going to be 1%, 20 to 32%, so on and so forth, and we'll get capped at a final figure of 10%. So it can't be more than 10%. The interesting feature about the repayment plan that's coming out, or the RAP for short, is that if it does not reduce your principal balance by at least $50, then Congress is actually going to split the difference with you. So if it only reduces your principal, let's say by $10 in that given month, Congress will cover the remaining $40. So you're still making somewhat meaningful progress of reducing the overall loan balance. Again, is this a huge deal for a lot of people? Maybe not, but under this new plan, it is a new and unique feature. And the point that I'm making is that Congress can change these rules at any time, like we're seeing right now, right? So just because this plan is in effect today does not mean that these plans will again change sometime down the road in the future. One of the last biggest changes are affecting Parent Plus loans. If you have taken out a Parent Plus loan, historically, you haven't been able to move that into an income repayment plan, but there was a workaround, right? You could move it into a direct consolidation loan, and then under the direct consolidation loan, from there, you could select one of the ICR plans, thus giving a lot of parents a lot more flexibility in terms of how to pay down their loan. This typically reduced the monthly payment by a lot for many families out there. So if you have a Parent Plus loan and you have not moved it into a direct consolidation loan to qualify under the, I'll say current, but they're going to be old very soon, plans, now is the time to act. There's typically a 30-day to 90-day processing time to get these loans into effect. After July 1st, this option is not going to be available at all whatsoever. You're going to be stuck with the Parent Plus loan the way it is today. So if you're looking to take these loans and try to get them onto the current plans before they phase out over the next month and a week or so, we really don't have much time left. Now is definitely the time to act. I cannot stress this enough. And I know this video is somewhat urgent in this regard, but that's because we were really given short notice on this and there's really not a lot of time frame. My biggest concern seeing for clients that we work with is that the system may get overloaded toward the due date of July 1st. I think a lot more people will start to log in and submit their loans, and that could overwhelm the system. And that could maybe unintentionally, even if you submitted it today, as an example, that might unintentionally phase you out just because your application was not processed on time. So, again, there's a lot to think about. I know I covered several different topics very, very briefly in a short amount of time. There's not a tremendous amount of clarity around the new plans yet, but I will say if you are a student or a parent, the new student aid website. So if you go to studentaid.gov and log in, there is actually a simulator now for you to go through. I've walked through a couple of clients of this already. We've done a screen share and gone through it together, and you can go through different iterations. So it is a pretty cool tool. You can see what your repayment would look like based on an IVR plan, an ICR, some of the new plans that are going to be rolled out. Not every option on the new side is there yet. I think more will be rolled out probably after July 1st, but they're really trying to give students access to the information they need today to make a decision whether or not they're going to stay on these old or current plans until they get phased out in about a month or so. So again, a lot of information to consider. The biggest resource here is going to be studentaid.gov. If anyone needs help, going through this website, feel free to call our office, and one of the CFPs here is going to be happy to go through that with you, whether it's myself, Nick, or Paul. So anyone that needs additional assistance, please don't hesitate to reach out. I know it's kind of a big decision that is being time crunched, and a lot of times, I know at least for myself, when I have to make a big decision under a time constraint or time pressure, sometimes I don't always think everything through. So it's always nice to have an unbiased third party just giving additional perspective in that regard. So again, a lot of information is going to be coming out over the next few weeks. We'll probably know more about the newer plans. I would say, again, we've sort of been giving like the general synopsis of how these new plans are going to work. Again, after July 1st is when all the current plans are going to be phased out completely. So if you want to lock in these current plans, please log in now and try to get this done. And keep in mind too that if you're going to need federal aid moving forward, right? And this is the big thing moving forward. So beyond July 1st, the plans, from what my understanding is that if you enroll in one of the current plans, but then need to take out additional federal aid, then your existing loans are going to get moved to that new program. They're not going to still honor the old one plus the new one. So again, something to consider here, just knowing that there are changes. So again, if you're looking to keep your existing plans the way they are today, and this is for someone who maybe still needs 3 or 4 years of schooling, this is probably not going to be a big deal. But for maybe someone who's considering a graduate program over the next couple of years, or maybe you have a student who is a junior, they're going to be entering their senior year, and then pretty much for a fact they're going to be done. They're not going into a graduate program. They're not going off, to medical school or anything like that after the fact. Then you would want to consider, is it worth it for me to try to squeeze out an additional year under the federal program, knowing that my old plans are going to get eliminated if I do so? Or do I try to look somewhere else? Do I consider maybe a private loan? Do I look to maybe find additional scholarship opportunities or additional loan assistance from the university or college my student is at currently? So again, these are going to be a lot of questions that I think a lot of families are likely going to have. And I know that the time constraint is not really helpful here, which is unfortunate, but it is what it is, right? So again, if anyone does need help, feel free to call our office, send one of us an email, and we'll do our best to go through these options with you, because I know this is stressful to a lot of people. And even if it's not stressful, you still have to make a decision, right? And if you don't make a decision, you're automatically going to be changed over to the new plans 90 days after July 1st. So you have up until July 1st to make a decision. And then if you don't make a decision at July 1st, then you're just going to get rolled into the new plan automatically at that time, whether you do anything or not. So long-winded. Thank you everyone for tuning in. I appreciate it. And I look forward to having more conversations about this. Again, as we find out more, we'll probably talk more about it. I didn't do my usual market update today because I thought this was somewhat pressing and timely. Thank you again for tuning in, everyone. And I look forward to seeing everyone again soon.